Hello, everyone, and welcome back to our new episode of Phillip Trading Podcast. My name is Liao, and today we have Trent with us. He's a senior dealer and product specialist in Phillip Futures. So, how are you doing, Trent?
Yeah, I'm feeling good. Good to be back here.
Okay, great. Yeah, so recently, I believe that everyone has seen the news that President Joe Biden called on Congress to suspend the federal gasoline and diesel taxes for 3 months in order to ease the financial burden of the general public. So at issue is the 18.4 cents a gallon federal tax on gas and the 24.4 cents a gallon federal tax on diesel fuel. So if the gas savings were fully passed on to the consumer, there will be roughly a 3.6% savings at the pump when prices are averaging at about $5 a gallon nationwide. So let's see what Trent can tell us about the potential trading opportunities in the oil market. Okay, so our topic for today is what does the US fuel tax cut means to the oil market? Okay, so Trent, can you explain briefly on the background on the US fuel tax cut?
President Joe Biden on Wednesday called on Congress to suspend federal gasoline and diesel taxes for 3 months. So the move comes as gasoline prices hit a record earlier this month, with the US average prices topping $5 a gallon for the first time ever. Okay, so currently the federal tax on gasoline stands at 18.4 cents a gallon, while the tax on diesel is 24.4 cents a gallon. Okay, so if this federal gas tax was paused, then pickup truck drivers most likely will get to save $5.52 every week. And on the other hand of the automotive spectrum, compact car drivers would have saved $2.21 per week. Okay. Biden also called on states to suspend their own gas taxes and offer similar relief. And some of the states already taken such steps, such as Maryland, Georgia, Connecticut, and New York. In early March, Penn Wharton budget model researchers estimated that any federal gas tax halt could reduce a person's average spending on gas between $16 and $47 in the cumulative span from March to December 2022, depending on various factors. So all in all, this US fuel tax cut will definitely benefit the US citizen.
Okay, well, yeah, hopefully the tax cut could really lighten the heavy burden of the people, especially during this high inflation era. Okay, so yeah, next question. What is the impact to the oil market, whether it's short term, medium term, long term? Yeah, the impact, and how did market response after the announcement?
Okay, so on Wednesday, right after Joe Biden announced this move, oil prices actually tumble on the news of a plan by the US Joe Biden to cut fuel costs for drivers. Okay, Brent crude futures were down 6.5% to $107.60 per barrel, while US West Texas WTI crude oil futures fell by 7.1% to $101.78 per barrel. Okay, this knee-jerk reaction mainly due to the expectation of a potential increase in oil supply from US oil producers from this fuel tax cut. But however, there are mixed opinions on this matter. According to Howard Glattman, a senior fellow at the Tax Policy Center, the tax break would increase demand for oil, which is currently in short supply and is not ideal way to fight inflation. Hence, in the longer term, we may potentially see a rebound in oil prices due to increased demand from consumers if the fuel tax holiday is passed.
Okay, right. Yeah, so that makes sense too. The oil price might rebound once the fuel tax cut is gone. Okay. So how can trader capitalize and discover the opportunities in the oil market?
Okay, so if traders are interested, they can actually capitalize on the recent price movement in the oil market by trading the NYMEX WTI crude oil futures. We at Phillip Futures, we offer three contract size, which is standard, mini, and micro contracts. So to our audiences who are relatively new to the crude oil market, you may consider trading the micro WTI crude oil futures. The margin for micro contracts are 10 times lower than the standard contracts and are suited for investors with lower capital to participate in the market. At the same time, we are currently having an ongoing promotion on micro crude oil contracts, of which client will be able to enjoy a low commission of only USD 3 per contract.
Wow, okay. So in fact, that is a good news for traders to enter the crude oil market using the micro contract, which is a very affordable one. Okay, yeah. So lastly, last question for you, Trent. So is there anything that the traders should take note of when trading in the oil market?
Okay, apart of the potential fuel tax cut, investors also need to pay close attention to the development in Russian-Ukraine conflict. So any positive development in the war will definitely push oil price lower. And apart from that, another factor that is currently affecting oil market is the fear of a potential recession in the US. So investors will have to monitor the US economy indicators along with the upcoming monetary policy by the Federal Reserve. Any aggressive rate hikes will definitely affect the consumer spending and potentially might cause an economic downturn.
Okay, yeah. So indeed, currently the oil market is having quite a large downswing from the high of about 120 level to the slightly above 100 level. So it's like about a $20 down in just about a week. Yeah. So anyway, so for those who wish to trade the crude oil futures, feel free to be in touch with us. You can drop us a message or comment down below, and we will get back to you as soon as possible. Okay, so now we have come to an end to our podcast today. Once again, thank you, Trent, for the wonderful sharing today. Happy trading, everyone, and see you guys next round. Goodbye.
Thank you. Bye-bye.
Thank you.